right, guys. It's Wednesday, August 2nd. We're not going to have our 12 p.m. show with Chris Tuttle today. He can't make it. So markets are correcting. Last night, there was a catalyst, which is kind of pretty scary because I lived through this catalyst before. Fitch downgrading credit rating of, I guess, U.S. debt from AAA to AA, something like that. And man, I remember, was it 2009 or 11, something like that? It was actually a spark for a major market crash that lasted a while. So it was a little scary last night. And man, it was hard for me to just flip around and go short last night when I saw this. And maybe I should have. I looked at SQQQ and said, should I buy SQQQ? And I didn't do it. Instead I bought, said maybe gold would go up on this. Gold did jump a little. So I bought GDX, and that is not working out either as a hedge this morning. So should indices here for a second, see where we're at. Okay. 200-day moving average, I guess, we've been saying as long as we're above the 20 DMA, we're bullish. But at this point, I'd say the 20 DMA is a target. So I do think at this point with this catalyst, we're going to be testing here that 450 on SPY. QQQ, I think, we're another $2 lower, 377. And then hopefully we bounce off that level, but you never know. RK, hopefully, but so at this point, it's not like, oh, we're above it, everything's great. It's more like that's your target on this catalyst, because I'm not the only one who had this memory from 15 years ago or so. Probably should have acted more on that memory last night. VIXI, I didn't think of VIXI. This is a VIX until this morning. I'm like, how's VIX doing? That would have been a better one to jump on, than gold. Gold is very difficult to predict. I mean, so many different factors go into gold. But yeah, VIXI, just volatility, that would have been a good one. So you see VIX up 6% this morning. So look, we're in market correction mode, and it's going to be a much harder environment to do stock picking, all right? But we're going to go through these and see if there's anything that can shine today. There are so much stuff. This show might take a little bit because there's so much stuff in the news feed. I probably missed some stuff. I mean, dozens of press releases relevant to the 300 stocks I follow. So most of them I just kind of said, no, I don't like them, ignoring them. I don't think they're going to outperform today. There were 2 or 3 that caught my eye, and they're at the top of the list over here. First of all, Huge is a new stock. Okay. So Huge, I got this because I follow Celsius. Celsius is on my list. And they had a very interesting press release out here that they are licensing out a rapid alcohol detox drink, licensing out to a private company. And now there's two really interesting things about this. Well, you see Celsius and Coca-Cola are tagged. So I never heard of this company, Huge. But if you go in here, you'll see they're talking about the executives who are in charge of this rollout were former executives at Celsius and Coca-Cola. John Duffy, 22 years at Coca-Cola, and then Jerry David, 5-year CEO at Celsius. Now, I don't know exactly at what time he was the CEO of Celsius, but that's interesting. So he was in charge of this product rollout for this detox drink that they did a licensing agreement this morning with this company, whatever it's called, Selly, something like that. Now, take a look at this licensing agreement. We'll receive a 7% royalty up to $250 million. And then the royalty goes down to 3%. In addition, up front, they get 100 million shares, deemed value 50,000. I guess that's not much. And the capital of is that what it means? 50,000? Is that what it means? So I don't know. So there's companies, so maybe that's not much. And also an anti-dilution warrant in this company. So, but in any case, the important things is not this like any kind of, money or shares are getting up front. The important thing here is John Duffy and Kevin Harrington. I'm sorry, Jerry David. Jerry David and John Duffy. Yeah, it's John Duffy and John Duffy is over at Selly. So he's a Coca-Cola executive doing this. And then on the Huge side, FSD Pharma, you have the Celsius guy. So that's point one. And then the other thing is important is 250 million in royalties. And you compare that to a 50 million market cap. So as far as like predicting what can the stock do today, I'm not saying there's a long-term investment at all, because I don't know what their capital structure is like. I don't know when they need to raise money again. There's lots of, in fact, this look could be a little, it seems a little bit promotional. Something about, where was it? Former executives, like, okay, they have this here. Well, this guy's been, I just didn't know about it, but this guy, former executive Celsius, has been at FSD Pharma for a while, ostensibly. That's what it seems like. But they like putting it up there as a subtitle of this release. I don't know, a little promotional. So I'm just looking at what's the rest of the market going to think. A 250 million possible royalty on a 50 million market cap. That's how I make my decisions. I make my decisions based on what's the rest of the market going to think for today. Now, I'm not going to hold this past today because there's offering risk with a small company like this. Okay. So in any case, so now we turn to the technical. So I'm saying, all right, based on the sentiment of the Celsius guy being involved, based on the value of the deal, which is like a pseudo fundamental, right? This 250 million versus the 50, the perception of fundamentals, let's call it, based on those two pillars and the technical here of crossing over the 20-week moving average. And then I'm looking at the candles. I'm basically saying target range here is 150 to 175, and your buy range is close to that 20-week moving average. So like buy in the 130s, sell in 150 to 175. That's a trade I put on this morning. I don't know what my average is, but it's probably close to 140. And I sold some at 149 because I was right near our first target. Missed this sell up here in the 160s. But I'm going to put this trade plan to work today. I think this could work today in a red market. I think you could see this. It did a full gap fill in pre-market. It might do another gap fill. So I wouldn't be shocked to see this go to like 130, 132 ready to open with a gap fill. But this is probably my top idea in terms of trading for today in this market. All right. So that's probably going to be pick number one, even though it's a micro cap that I'm not that familiar with. So that's HUGE. Then out of all the earnings reports, I looked at a bunch of them. Perry looked the most impressive to me in terms of the magnitude of the beat and the raise. They raised full year EPS. They beat on every level, like top line, bottom line, raised margins, raised the revenue and EBITDA for the year. Everything across the board was a beat, and they raised their earnings EBITDA guidance for 2023 by 7.7%, and the stock's only up 2.3%. All right, so our magic formula. Does that mean the stock's going to go up 7.7% today? Not exactly. You also have to consider the technicals, and you also have to consider that, wow, RK's down 2.5% this morning, it looks like. Is that how much it's down? Hold on. Man, it's going to be bloody today. Yeah, okay. So you also got to consider that. So in any case, it's up 2%. Maybe it can make its way up towards 7% or so. But now let's cross-reference with technical. See, if we're clearing these candles here. So that's good here in pre-market. Well, 36.70. Okay, so 36.70 is going to be your first resistance here this morning. And if we break that, let me go to the weekly chart. We're above. Oh, this is looking great. 36.70. I don't know. Maybe 38 would be the next target right there. Let's just do something. Let me just do the math on this. The yesterday's close was 35.48. Let's just do this. 35.48 times 1.077. 38. It's funny when it works that way. Okay, so that's your target for the day. All right, so I get two numbers, 36.70 and 38. Okay, 36.70 and 38 are the targets I'm giving you for Perry today. Let me just write that down for myself because I don't have my partner today. Again, he'll be back tomorrow. 36.70 to 38 on Perry. Okay, but you might have to price in a little bit of hey, if the market's going to be down 1 or 2% today, maybe you got to discount those targets by 1 or 2% as well. All right, so that's Perry. INVZ, a new company for me. I'm not going to chase it right here, but interesting news. It's on my radar now. Actually, I looked back and I saw that Chris Tuttle had it on the radar. But even before Chris Tuttle put it in the room, I think I read about it from Goldman Sachs. Goldman Sachs, remember Laser, LAZR, which I really liked. And Goldman Sachs is the only one with their sell rating. I'm like, what's going on? They had like a $5 price target when the stock was like $6. Or the stock was like $5.50, and they're like, sell, $5 price target. That was weird. And if you go look at their report, which I was able to get a snapshot of, they talked about how some point in the future, lasers margins will go down because there's competition from these two little microcap companies you never heard of. One of them was INVZ. Okay, so now it's all come together. Now that it's in the news and everything, I put two and two together, and that's who they were talking about. So INVZ has they beat this morning. There's, here you can see the magnitude of the beat. It's very small, like they're just at the beginning of generating revenue. I don't know much about it, but it's a LiDAR company. They have a deal with BMW. They had a press release about expanded relationship with BMW this morning. So this stock is now on my radar, okay? Not making any moves with it today. I'm just putting it out there that maybe it could outperform today because of this BMW news. Maybe you can get support here at 388. Also, they raised guidance. So that's something to keep track of, but I'm not going to put a trade on it today at this point. Drio had some news to be aware of. Interesting news. I'm also not going to put a trade on this, but Dario introduces GLP-1 behavior change program. So this could be good news because Chris Tuttle had a suspicion, and he was right. I think he was right that the reason that maybe insurance companies are dragging their feet this year implementing things with Dario is because all of a sudden this past year they're being blindsided with very high expenses covering these GLP-1 injections, these anti-obesity drugs people are taking for diabetes, and I think off-label for obesity. I'm not sure exactly, but in any case, they're paying so much money on that end that they're like, well, do we need Drio? Why should we pay for Drio now? That may be part of it, what was going on. And the fact that they're putting this program out, I think gives credence to that thesis that Chris was telling us. So Dario introduces GLP-1. So this could be a good development. But I just don't think it's actionable enough to trade on today, but we're going to keep track of Dario progress. AMD's gapping up 2%. And to be honest with you, I don't know, man. The beat was very tiny. All right. Very tiny beat. I'm not sure. I got to maybe read up on what these analysts are saying. The raise was also just a sliver of a raise. All right. But I guess they just talked about AI a lot. All right. Lots of AI headlines here and analysts increasing their price targets. Look at this benchmark 108 to 145. So lots of price target increases, lots of AI talk. Look at this 92 to 130 at JP Morgan. So the analysts love it. But the numbers itself, to me, didn't justify such a big move this morning. So for that reason, I'm not in a position yet to play this if I don't understand it. So I'll have to read up more on this, and maybe in the future, I'll take a trade or investment, maybe more like an investment in AMD possibly. But that's my stance. I'm not going to put a trade on that one either. All right. So Uber got a couple price targeted. So this is our biggest mistake yesterday was Uber. Okay, I got that wrong. We have support at $46. We got many price target increases this morning, but only about $2 or $3 higher. So like people who are at 45 went to 47. People who are like 50 went to 52. I think there was someone who went from like 58 to 60. You can see this. So not huge price target increases, but I think the read, you can see the 60 here and the 55. I think the read we had on earnings was correct. It's just the stock's been up so much. And it just needs to correct. And it wasn't a big enough beat to warrant like a further, 5% move or whatever it is. So hopefully I would hope this 20 DMA holds. And if it doesn't, this is all going to be a buying op long term. Anything at the 20 DMA or below, I think is going to be a nice buying opportunity. Uber has inflected. Okay, I think I told you guys that this yesterday morning, and Dan Ives went on Bloomberg yesterday afternoon and said the same thing, that this was an inflection point quarter. So Dan Ives and I, we're on the same page, buddy. Inflection point quarter. All right. Man, I don't think I'm going to push on anything else except maybe Apron. Look at this. It's just big corrections everywhere. It's nasty, man. I really wish I had that VIXI or SQQQ. But Apron also, I'm going to move Apron up to the top here. Relative strength, really strong relative strength over key moving averages. 605 was a key level yesterday. Look at this. RSI still relatively low. This chart is not completely accurate. All right, go look at it on your desktop to get the daily and the weekly moving averages. It's just this gap here is not correct. This is because of reverse split. But nonetheless, it is accurate. They just broke the 20 DMA, and they just also yesterday broke the 50 DMA at 605. And we have the big event coming up next week. I'm sticking with Apron. I think Apron can outperform. The market was down yesterday, wasn't it? When Apron was doing well. Now I forget how the market did yesterday. But well, it was choppy. What was down? I felt like it was worse than that yesterday. Must have been ARC. Yeah, okay. So in any case, we had outperformance from Apron yesterday above key moving averages. Event next week. So I'm gonna go with today a very small list for you guys. It's gonna be huge Perry and Apron. That's it. That's all I got. And man, I wish I had Vixie or SQQQ. And I'm like kicking myself for thinking about gold last night as the hedge. I really should have thought about the VIX. But in any case, yeah, this is a scary catalyst. Let's just all hope and pray we hold that 20 DMA, because if we don't hold the 20 DMA on these major moving averages, it could be nasty for at least a few weeks. Really could. You can get into this zone here and take a few weeks, who knows, maybe a month or two to consolidate in this range, bounce off the 50 DMA, and it could be really ugly. So hopefully that's not going to happen. But for today, huge Perry, Apron, good luck. We'll see you at the 1 p.m. update. Spread the word, storytrading.com/YouTube. Thanks for joining.